If you are looking at current price action right now and wondering what the heck is going on, historical context matters, volatility matters, and I'm going to walk you through why this is some of the craziest price action we have seen, likely in better than 12 months, but most definitely the most we've seen this year. Now, we got to go back in time a little bit to give this context. And the context is to look at the candle that we had back in mid-February, this candle right here. That was a single high volatility beyond the 68% probability, right? There's a 68% probability of ranges. That's what daily price movement ranges do. And we broke it. We had one candle like that. And it led to a little bit of volatility before the trend resumed. One candle. And some of you might remember mid-February was a little challenging. Fast forward to today, we have had 1, 2, 3, well, actually, I call this 3, 4, 5 candles now, like that single candle we had back maybe in early March, and most definitely the one we had in mid-February. This is the longest sustained high volatility environment we have dealt with without direction. So some might say, Raghee, if we were dealing with high volatility, it was going down. That's pretty easy. Red candles, and where the red candles meet the gold area of the daily price movement range, great. We get long puts. If this was moving higher with high volatility, easy, right? We'll wait for the green candles or even the yellow candles to meet the gray area and we'll buy. But we are stuck in a range. Does everyone see that? This is the Thursday volatility candle from the 4th, and we're pretty much still trading back and forth erratically in that zone. S&P is about the same thing. Back and forth erratically in that zone, right? We really haven't gone anywhere. Slightly lower lows today, but really we haven't for the bulk of the last, again, since the 4th. So for the past 8 days, 8 calendar days, we haven't gone anywhere in 1, 2, 3, 4, 5, now 6 sessions, right? That's what's happening. That's why this market feels like you're reaching for Dramamine. And that's what we're dealing with. So now I'm going to go back to the plus side of this. The plus side is this is not really data driven. It's not because CPI or PPI was anything crazy. It's not that non-farm payroll was a problem. We are having a lot of Fed members adding a lot of confusion and Fed members kind of contradicting what we expect and what we've heard from Jerome Powell. And as that's happening, adjustments for the rate cuts, June versus July, where are we going to be, are up in the air. This is why the markets are not, whether you're looking at the indices, S&P, NASDAQ, Dow, Russell, whether you're looking at some of the stronger sectors, this is why we're not seeing a broad-based extreme sell-off. Again, remember, this is not a downtrend. We're barely breaking the support of the month. So this is not a downtrend. So why aren't we moving in any direction? Because most traders and investors know rate cuts are coming, but we don't know when they're coming. So this is really tantamount to a tantrum. This is really the 3-year-old throwing themselves on the floor at the grocery store because they can't get their favorite sugary cereal, right? That's what this is. We want clarity and we're not getting it. Hence the volatility. Volatility is tough to trade. What do? Shorten the time frames, keep our targets closer, and try to focus on the trends that are out there. The trends that are out there are still in some places, just not common places. There's still trends in XLE, which is experiencing a high volatility day of its own. There are trends still out there in the XME, which also is experiencing a high volatility day. So nothing is getting a pass on this. GDX, which is the gold miners, high volatility day. Also, you see how the gray and the gold are crossing? That is price action in this session exceeding the 68% probability. We have an idea of where price movement is 2/3 of the time, and it's been working beautifully. When the volatility gets high, everything gets tougher to trade. So I don't want anyone here racking their brain thinking, oh my gosh, I'm doing something wrong. No, gang, the market is at extreme levels of volatility. You can see it in the daily price movement ranges. You can see it even in places where the trend is still intact, like GDX, like XLE, even crude oil. Crude oil futures, really good look. Today's volatility, a little higher, not super high though. not super high. Crude's actually maintaining pretty good structure, actually really good structure. Gold, look at the gold in the gray, crossing. That's pretty high volatility for gold. Copper, same thing. So when you're wondering what the heck's going on, this is how we measure it. This is what's happening right now. There's nothing wrong with kind of stopping and saying, what kind of environment am I dealing with? Here's the great part of this. Let's end this on a high note. Rough seas make for good sailors. Rough seas make for good sailors. Handle this action. Have a way to measure it. Whatever you're using, daily price movement ranges, VIX, whatever you're using, have a way to measure the price movement ranges and wait for them to normalize. In the meanwhile, this is going to be tricky trading. But if we can manage risk, if we can be discerning about trends, crude oil, gold, miners, energy, oil services, energy, so XLE, OIH, XOP, GDX, XME, right? If we can focus on the relative outperformers right now, we will once again get the trend back on track once this volatility wanes. This is the longest period of heightened volatility that we have seen this year, right? But again, rough seas make for good sailors. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.